So joining us via Zoom to talk about these movements is Gary Booysen, Director and Portfolio Manager at Rand Swiss. Thank you very much for joining us as always, Gary. Let's start with the overall market movements today. Some great positivity coming through large parts of the indices today. And I suppose the big story here is the Federal Reserve and what they're expected to announce later on when it comes to the interest rates.
Absolutely. So we had a fairly broad-based sell-off yesterday, and I think we're seeing a lot of a recovery today. So we had the resource index, as you saw, up over 1.5%. Industrials also up over 1%. And the only segment of the market that was lagging was the financial index. And I think that might have something to do with I suppose, just the fear around banking contagion, maybe. The US banking crisis still definitely, top of investor minds. Now, we're seeing a lot of money flow to those big four US banks, the likes of Citigroup, Wells Fargo, Bank of America, and of course JP Morgan that stepped in to bail out First Republic. But yeah, you still get the sense that just people are nervous about what's happening in the banking sector. And I don't know if that's justified in South Africa, because looking at the higher interest rates, they're certainly making incredible margins on specifically on their net interest income. It's all to play for tonight. So we've got the US Fed coming up, and markets are expecting a 25 basis point hike.
And they've also that announcement has, or the anticipation rather, Gary, has contributed to the Brent price as low as it is at the moment. I think it went down about 4% in afternoon trade today. Your thoughts on that outlook, and if it's a reprieve we can look forward to last, perhaps, when it comes to fuel prices going forward?
Let's hope so. So if you look at it, I think you're 100% right. The oil market's definitely reacting and trying to position themselves ahead of the US interest rate hike, and trying to understand what the demand picture is going to be like. So with the US banking crisis going on, the last Fed meeting, Jerome Powell came out and said that that essentially contraction of credit will act potentially, and he said it's very difficult to quantify this, as about a 0.5% increase. It is going to cool the economy. Now, if the economy is cooling, you don't require as much oil, and of course, you'll see oil prices falling. Now, the idea is, like, if you look at the Fed funds futures, they are pricing in the 25 basis point hikes, but they're still predicting that there's going to be a cut before the end of the year. The chances of us sitting at a terminal rate of 5 to 5.25% is almost zero by the end of 2023. So market thinking that interest rates are going to come down, but the oil market not liking that at all, saying that we are going to go into maybe a deeper recession than people expect. And even while we have Saudi Arabia contracting output, the demand picture is not maybe looking as good as participants had hoped for.
Not at all, Gary. Let's move over to some company updates. Astral Foods. We've spoken to the CEO a number of times. They're the largest producer of chicken, and they've struggled with the energy crisis and the increasing costs that they've had to absorb. They're saying that eventually the consumer is going to experience those increases as well.
No, of course. A business can only do so much. It can only swallow losses for so long. And we saw in the trading statement today, which is a trading statement for the 6-month period up to the end of March, they're going to get an 87 to 92% drop in their headline in their HEPS. So it's significant. And that, yes, of course, it has to do with load shedding. They've had to funnel some of their capex, so the money they would have spent on capital expenditure and growth into just keeping the lights on, essentially. But for Astral, the majority of the cost is coming from the higher feed cost. That accounts for about 70% of their cost. And obviously with maize prices moving up, that you've got to feed the chickens. And unfortunately, that does drive up the cost of a very basic foodstuff.
Yeah, no, absolutely. One company that's experiencing the opposite is property developer Calgro M3. So they do affordable housing. They were able to sell quite a few of those, contributing positively to their profits, Gary.
No, so exactly the opposite picture. So you've got their headline earnings per share up between 40 and 50%. It is a fairly small company, so playing primarily in the affordable housing segment. And they did say they managed to I suppose hand over, so complete 3,186 new residential properties. Really playing in that kind of 500,000 to 1.2 million rand space. But yeah, a very small company, kind of a little bit of a low volume stock. So the whole volume in the share traded today was only around around 8 million. But the stock price did finish up around 7%. So looking good for Calgro M3.
Thank you very much for that update. As always, Gary Booysen, Director and Portfolio Manager at Rand Swiss. And